EV maker Polestar, ticker symbol PSNY, stock is trading at about $8.8 with a market cap of about $18 billion. Polestar has got a lot of attention of people because it's partly owned by Volvo and Chinese automaker Geely. Polestar made about 29,000 vehicles in 2021, and in 2022 they have projected to make about 65,000 vehicles, but due to the uncertainty and macro trends, they are only projecting to make about 50,000 cars this year. In 2025, they are projecting to make about 290,000 vehicles, and currently they only produce Polestar 2 model, but by 2025 they are going to add 3 additional models, and together they are going to produce about 290,000 cars. Due to the SPAC deal, they have raised cash about $1 billion, and they are saying that they can sponsor this growth for the next 3 years using this $1 billion. But when we look into their tentative financial expenses, it seems like they are going to spend most of that $1 billion this year itself. So we have to see how they are going to sponsor their growth in the next coming 2 years. They will probably issue more shares or take some debt to sponsor that growth. Polestar is saying that they are an asset-light company. In other words, they are going to use the existing infrastructure as well as supply chain of Volvo and Geely back in China and in US, in South Carolina. So they're saying that their operating expenses and capex would be much lesser than a company that's going to start brand new. This argument seems valid, but we have to follow their finances in the next few quarters to see if their operating expenses and capex are significantly lower than other companies which are starting off brand new. So let's look at their evaluation in 2025. They're saying that they can make about 290,000 cars in 2025 at an average price of about $50,000. Keep in mind that they can avail the $7,500 EV credit in the US when they sell the first 200,000 cars, right? So they're confident that they can sell all the 290,000 cars in 2025. In the current economic environment, we're seeing that companies are giving projections, but they're not able to meet it, right? So I'm not sure whether Polestar can make this 290,000 cars and launch those additional 3 models in 2025. But to show an optimistic evaluation to see where this company would be in 2025 if they achieve all the targets, I'm going to assume that they're going to make this 290,000 cars in 2025. At $50,000 average price, they would make about $15 billion of revenue in 2025. Auto industry is a low margin industry, and we do know that Tesla doesn't spend any money on advertising, and they do not have dealers, right? Dealers charge about 6% commission. So that commission isn't there with Tesla, right? Despite this, Tesla makes net profit margins in the range of teens. So I'm going to assume the same teen percentage net profit margin for Polestar. So I'm going to assume 15%. So they're going to make about $2.25 billion of net income in 2025. With Polestar's growth rate and 15% net profit margin, they deserve about 20 to 25 multiple, but I'm going to be generous and I'm going to apply a 30 multiple on this, because we do know that investors get excited and pay up for growth, right? So if I apply a 30 multiple on this $2.25 billion of net income, we will be at about $63 billion of market cap, right? So currently they are at $18 billion. $63 billion in 2025 represents about 3.6x. This is assuming that the stock count is going to stay the same, right? But since Polestar is a growth company and they have a lot of capex to do, we can assume about 5% dilution in the next 4 years. So the outstanding share count will increase by 20%. So we will only get a 3x. Currently the stock is about $9. So in 2025, we will get about $27 for this company if they achieve all the targets that they set out and investors get excited and pay up that 30 multiple. So if I buy now, I'm looking at a 3x reward in 4 years with high execution risk. But it doesn't seem too compelling to me, especially when Amazon and Google, who can easily 2x in the next 3 to 4 years with low to medium risk, right? So I prefer a 2x with low to medium risk than 3x with very high execution risk. So I'm not going to buy PSNY stock at this price, but what I'm going to do is to follow this stock in the next few years, and I'm going to track their operating expense and growth. And I'm also going to track their quality of the vehicles and how people are liking this car. cars, right? So based on this, I may invest in this company in the coming years based on their execution.